What's up, guys? JJ Fade 23. I'm just going to make a quick recap video of my trade today on SPY. And yeah, so let's get started. All right, guys, basically the thesis for the trade is the same as I always use. Guys, I pretty much only use key levels, EMAs, and Fibonacci's for my trading with price action and volume. But notice how SPY, and pretty much on a lot of trending stocks, look at SPY. We go up, come back to the 21, come back to the daily 21. Guys, this is the 4, the 8, 21, and 34. And I sometimes have the 50 on here too. But for right now, I just need to show you this. As you see, when stock's trending, pulls back to the 21, pulls back to the 21. A really nice trend holds the 21.34 pretty much all the way up. In my book, you're super bullish if you're above the 50 EMA. Or you're bullish above the 50 EMA, you're super bullish if you're above the 21.34. And so I use the 21 a lot, especially when it combines with key levels. So you see we're trending up, pull back to the 21, pull back to the 21, pull back to the 21. Break below it once we reclaim. I love when stocks fall below the EMAs, then reclaim, and then pull back to them again. Back to the 21.34, back to the 21. Now, we fell below here. But if you'll notice, this trade right here is different. See, and everybody in my room knows I would not take this pullback to the 21. Why? Because we came too high up into higher low position right here. See this? So if you notice, guys, this is a strong uptrend making new highs, higher lows, higher highs. Breakout, we made a higher high over here, and then we pulled back to the EMAs. Now we made another higher high, pull back. Now right here, we start to dump. When we go up to here, I'm not going to buy this pullback because we just made a high. We just made a lower high right here. So this could have came all the way down to here to make a higher low. Who knows? But I don't buy EMA pullbacks, or sometimes I do if the chart is really beat down, but not often if they come up to a higher low position above the 61 to 78% fib, close to a real resistance level, and then pull back to the EMAs. I don't buy those. So now if you notice, right, what happened? We break out again. So now we've made a higher high again. Okay. We made a higher high again. This is the breakout level right here. We came back down to that level. I traded it here. I traded it long here because now this was great, right? We made a higher high and we pulled back to the breakout retest level, which is a multi-touch pivot retest level. Also double bottomed right at the 21. That was an amazing long. Now again, we've pushed up way off the 21. So now up here, I know we're a little extended off the 21.34, and we could come back to it eventually. So now I'm thinking that, all right, SPY's consolidating at the highs. If it does lose the 4 and 8, it's probably going to come back to the 21 and want to come back to this breakout test, right? This is normal, you guys. Look, breakout, retest, breakout, retest. Okay, so the personality is already showing me it likes to break out. The last time the stock broke out, it retested the breakout level and the 21. Now, if it does the same thing again, a breakout, retest plus the 21.34 rising, I will possibly take that trade depending on what happens when we get to this level. Now, so that's the thesis of the trade. All right, if we do dump down, you can either short it at the highs on a lower high, back to there, or you can wait to long it. But the overall uptrend is long, right? We're overall uptrend. By the way, guys, we have this trend line here too. So now we have a lot of confluence, all right? We have a lot of confluence. We have a breakout retest plus the EMAs plus this trend line. That's a lot of things. So the thesis for the trade is if we come down to this level, I would like to enter. Now that's part one, okay? That's part one. I would like to enter, but it doesn't mean I'm going to enter because I only enter if I now see what I want to see on the intraday time frame. Okay, so intraday, I use the 5 and 10 minute EMAs. I use the 5-minute EMAs with the pre-market data on so I can see what's going on, which would be like this. Right, so I can see I like the 5-minute EMAs. As you see, it's the same thing, right? 5-minute 21, 5-minute 21, really strong move down, flag off the 8. So guys, when the stock's trending at a medium speed down, it might go back to the 21. When it's trending really sharp down, it can ride down the 8. But I'm only using these for certain trades. The main trade that I'm watching intraday today was the 10-minute EMAs with the pre-market data off. The 10-minute EMAs with the pre-market data off are like my favorite thing to use. Now look, all right? Now this is what happens. So I know my level is down here, right? We have a lot of confluence at this level. Now this is how I do things, all right? If you notice, okay, from here to here, we get about 0.40% off before we start to pull back, all right? Now, we break support here, obviously, so I'm not trying to long this, not even close to trying to long this over here because this is all short now. You're below the 5-minute and the 10-minute EMAs. All right, here again, the distance about 0.40 again away from the 21 when we start to bounce. So notice, guys, right? From here to the white line is the 10-minute 21, about 0.40. From the low of this candle, we start to bounce. Again, 0.40%. Now I know we're coming down into my level here, right? And we're really starting to extend down. Another thing I want you to know, guys, is the average true range of stocks, right? SPY doesn't drop more than $10 usually in a day without bouncing. All right? So you can obviously use the ATR, obviously. But you can also go back and look. You know, there's not many days where we fell that far. Obviously, there's a couple of days we didn't bounce that much, but, you know, it also wasn't coming into key levels, right? Or it was after the lower high. But this just all pieces to the puzzle, all right? So the extension away from the A. Now, look right here. When we come down to this level, not to mention, guys, one other thing that I talk about all the time in my videos is the 4 EMA, okay? The 4 EMA, I don't care what time frame you're on, right? It doesn't matter what time frame you're on. You come off the 4, you come back to it. Come off the 4, you come back to it. You come off the 4, you come back to it. You come off the 4, you come back to it. It doesn't matter. You look at the daily chart, the 10-minute chart. I don't care what chart. It's such a tight EMA. It's very hard to stay off it for long. So now, all right? Now look, right here. When we come down to this support level, look at the extension off the 21. 0.57, even more than these. Not only that, you guys, as we start to flush right here, we get a gap off the 4. At this level right here, look at this. We're about 47.40 or about 574.40. Well, 20 cents off the 4. Visual gap, right? Into this level. Now I'm not trying to catch the ball. I'm waiting. Boom. Bullish engulfing candle. This candle right here flushed into my level and then instant whip back that engulfed this whole candle. Boom. Instant long into option calls. And then what do? I just hold the option, boop, take some off at the 21, boop, take off to the 34, then hold for the, and then I hold for the swing and see what's going to happen because I know we flushed into the daily 21 to key level. We could bounce back hard. I just moved my stop to even at that point. And then obviously, like, you know, that was a really good trade on calls and I'm just took out 2/3 already and just holding the rest. But that was a basic breakdown of, you know, how you can make 80% in literally like half an hour. So that's the way I trade, right? So I'm having a thesis to overall thesis to what I want to do, using key levels and EMAs, and then putting the puzzle together based on intraday smaller time frame things. All right, that give me confluence. So remember, the key level had multiple confluences. We had the daily 21, we had the trend line, and we had the breakout retest level. All right, the intraday chart was extended to a maximum point where it's bounced almost every time. It was even farther than that. Plus, we were off the 10-minute 4, and then we got the trigger candle entry. Okay, so that's pretty much all there is to it, right? The only other way that this could even be better if this volume candle was super high right here. Usually I like to see on reversal areas, you'll notice a lot of the times you'll get like something like this, right? It'll be a little bit more like, you know, you'll have like a little bit more reversal volume right here. You know what I'm saying? Like kind of like you can see it right here how it's like, you know, the volume elevates forward, bounces a little, or like, you know, let me show you. Sometimes, you know, not really right here. Maybe not on SPY as much as other stocks. You can't really count the open volume. But, yeah, other stocks sometimes, especially small caps, it will be more noticeable where they're going to reverse. You can use the volume reversal as also another indicator. But anyways, so yeah, that's pretty much it. Hope you liked the video. If you learned anything in this video, please give me a thumbs up and subscribe to the channel. If not, well, better luck next time. Thanks.